Welcome everyone to another edition of Endgame Finance. Today I have some exciting news. I actually purchased the Meet Kevin Pricing Fund ETF, and I want to go over with you guys today why I made this purchase, what I really like about this fund, and a few things I'm not so ecstatic about, and I think they can be improved upon. Now, I like this fund because it is a growth fund. It has a lot of tech companies. It is oriented towards somewhat of a hyper growth rate, sort of comparable to QQQ Invesco fund, which I also own. And both of these funds are heavily tech oriented. They're, like I said, built for growth. Now, what I really like is having a fund with really stable companies. There are no penny stocks in this fund or anything really too speculative. This is, like I said, very similar to QQQ. Only difference is expense ratio is a bit higher. QQQ is around 0.2, Meet Kevin is around 0.77. But I expect this to come down significantly as they add more funds under management, because fund is still fairly new and there's not as many investors yet. But as they scale this fund, I expect expense ratio to be comparable to most funds in the tech sector. Now, you don't even want to compare this to, for example, crypto funds, which can have an expense ratio up to 2%. And that's just simply ridiculous. But this fund has a expense ratio 0.77. That's their management fee. But this fund also does provide small dividends from one of their major holdings, which is Apple. So they will pay out these dividends, which will lower the expense ratios. Now, let's look at what's in this fund. The biggest holding of this fund is actually Tesla, with around 28% weight, which I think it's a bit too much, but it is a hyper growth stock, which will complement this fund, which seems to be oriented towards high growth. So Tesla is around 28%. Tesla just reported record numbers. They expect to produce close to 2 million vehicles. That's a growth around 38 to 50%, depending how you look at it. But Tesla is a really good company still, hyper growth. Cathie Wood has said she expects Tesla to 5x over the next 5 years, which I kind of doubt, but they will still produce very likely a very high growth. Second biggest holding in this fund, Pricing Power, or as it's referred to by its ticker symbol PP. Second biggest holding in PP is Apple. Apple's around 13%. Like I said, they pay a small dividend, which helps bring down that expense ratio. But Apple is one of the most stable companies. They're as good as owning bonds. So that's sort of an anchor for his portfolio in combination with his third highest holding, which is US Treasuries. So US Treasuries and Apple is around 25% of the portfolio. And this is basically the anchor that will prevent any wild price movements, and it will just sort of keep the fund stable. Some other holdings we see here is Generac and Solar Edge, which are power generation companies. As we see, demand for power keeps increasing, especially with more electric vehicles on the streets. There will be higher need for making generators and power generation and solar generation as well. So these companies do have somewhat of an accelerated growth in their future. Embraer it's another stock in the fund. Embraer is a manufacturer of airplane parts, airplane engines, airplane things. They're basically in the aerospace industry. Another stock in this fund is the Trade Desk, which do advertising. They're okay. I'm not the biggest fan of the Trade Desk, but I do like having some exposure to them. Even though I don't own their stock directly, I do want to have some exposure, which is one of the reasons why I bought this fund. Now, one thing I dislike about this fund is their three holdings, which comprise around 20% of the portfolio, which is Nvidia, AMD, and Taiwan Semiconductors. I'm not too happy about these holdings in the fund, mainly because we have passed peak demand for electronics. We're sort of on a downward slope of demand for computers, computer chips. So like I said, these companies are past their peak demand, which just sort of exploded during the pandemic when everybody was indoors using computers, using streaming. So the demand was huge, but now it's pretty much done. You can see with the latest Intel earnings, the demand is just not there. Intel earnings just basically collapsed. Their margins went down 100%. They're down to around 6% margin. It just basically means there is no demand for microchips at the moment, besides for maybe few industries like the vehicle industry. But for consumer products, there really is low demand. Because there is such low demand in this industry, there's no pricing power in any of these three companies, which is sort of the antithesis of this fund. This fund, PP, is for purchasing power. So this fund is basically oriented to hold companies which have purchasing power, which can lower their production costs because they just have so much demand. But these three companies I just named in the semiconductor space, they don't have that purchasing power. They're basically in the race to the bottom. They have so much competition now and so much supply that they will be slashing prices constantly throughout the year. Now, another thing I don't like about semiconductors, especially TSM, Taiwanese semiconductor manufacturer, is they are in Taiwan, which is under a constant threat to be taken over by China. The only reason China cannot take them over yet is because they will disrupt the microchip production to such an extent that their domestic economy would experience a huge slowdown. We're talking several percentages of the GDP, but they're trying to catch up. And as soon as they're able to catch up and have their manufacturing done on the mainland, they will most likely take over Taiwan, and it will certainly impact prices severely, especially for microchips. Now, I could be wrong about all this. That's why I buy ETFs. Look, everyone thinks they're a great stock picker, but that exposes them to a huge self-bias. All your wins become your genius work, and all your losses are because of market forces. What I'm saying is you should buy an ETF to get away from your own biases. Basically, leave yourself to a possibility that you could be wrong, or at least that somebody else could be more right than you are. And you should prefer to be making money over the idea of being right. Because I would personally always like to just make money regardless if I'm right or wrong. Now, this is why I bought an ETF managed by Meet Kevin. Like I said, I want to benchmark his performance next to mine. If I observe this ETF, what he adds to it, what he removes from it, I can see what I'm doing wrong or what I'm doing right, what I should increase on or slow down on. It's always good to have somebody else's perspective. That's why especially I chose Meet Kevin, because he's very active in the whole retail investor space. He can sniff out deals before many people can. He can probably see if the market will collapse before people do. He's really in the meme retail front space. Like, he sold his stocks last year right before the collapse. If I had done the same, I would have benefited tremendously. But he had that foresight. So if he had this fund, if I followed him, I may have done a little bit better last year in terms of just investing. So that's it, guys. That's why I like Kevin's PP. That's why I like Kevin's PP. His pricing power ETF. It's pretty amazing. I had some other people look at his PP, and we sort of all agreed that's Kevin's PP is where we want to be. That's where we want to park some money. We want to bet on his pricing power ETF just because he has a different perspective. He has different insights. And I really like to stay diversified. One thing, like I mentioned, what I was not really thrilled about is his holdings around 20% in semiconductors, which are past their peak, especially because Ethereum has switched to proof of stake as well. So there's not much demand for GPU, which is just bringing tremendous supply onto the markets, creating this glut. And none of those companies have PP. None of them have pricing power. They're basically in the race to the bottom. Questions? Please let me know below. Like, subscribe, and share. And guys, as always, have a great day.